Hey guys, how's it going? It's Andy from Magoo Investing. I was finally able to go out and get a haircut, and now I feel a lot better about myself. For the past couple weeks, I've been recording these videos, and I've noticed the slight mullet that I've been growing in the back, so I'm very happy to look a little more put together in future videos. Tuesday was a big day for the stock market. The S&P 500 finished the day over 3,000, which is the first time it's done that in a long time, back since March 5th. And so this kind of begs the question, where is the market going to go from here? We saw this catastrophic collapse where the market fell through the month of March and then has recovered very quickly. And we're pretty much back up to where we were at the beginning of March. And so at this point, I'm looking at two different industries where the stocks have been hit really hard and some of them have started to recover. And these industries I'm thinking about are airline stocks and the cruise ships. Tuesday was a big day for these stocks as most of them were up over 10% on a lot of optimism about a potential vaccine and things starting to open up more. There are some news stories about a lot of European countries are trying to kind of salvage the tourism industry and they're having looser restrictions on where people are going to be able to travel in the future. And so we saw the airline stocks up over 10% and the cruise stocks are up over 10% today. In the past couple weeks, I've been pretty bullish on one of these sectors, and that's been airline stocks. And I made a video talking about the 3 reasons why I decided to take a position in Delta stock. And that was just 2 Fridays ago when the stock was below $19. I took a position and now it's currently sitting around 25. So I've made a significant profit based off of this kind of gamble, and it has worked out really well for me. So in today's video, I'm going to be comparing and contrasting the airline industry to the cruise stocks. I'm going to talk about some of the reasons why they've fallen so far and kind of talk about the main reason that's holding me back from ever taking a position in cruise stocks. And then towards the end of the video, I'm going to talk about 3 stocks. 1, what I think is the safest stock. 2, what is my favorite stock, and 3, which one has the greatest risk to reward. This isn't the best risk to reward ratio, but it's a company that I think has a lot of potential upside, but still has some significant risk. So it's high risk, high reward. Before we get started, I have to say that I'm not a financial advisor, and anything you hear in this video is just my opinions. You have to do your own research before taking any position in the stock market, and anything in this video is not me giving any recommendations. It's my personal opinions on these different stocks. So when the stock market began to crash during the month of March, I talked very early, like the first week of March. It's crazy to think that was like 2 months ago at this point. But I talked about cruise stocks, and then later I started talking more frequently about airline stocks. Looking at cruise stocks and the airlines, there are 2 main reasons why these stocks fell so significantly. And the first one was the overall travel restrictions. These are travel-based companies, and when there's a lot of restrictions on where people can go, these stocks are not going to be doing very well. And then the second one is that these companies have very high operating costs. We saw some articles going around about some of the damages that were being done to airline stocks. Stuff about companies burning through $10 million a day, and so there's a lot of operating costs. And when there's no income coming in, that is a huge red flag for investing in these companies. Cruise ships, on the other hand, have kind of been like a petri dish for this virus. And there's been a lot of problems about the availability of places for these cruise ships to dock. And so while it appears like most of the passengers that were on the boats at the time have gotten off, there have been a lot of articles about boats are just kind of being placed in the middle of the ocean waiting to see what's going to happen. And it seems like most of the crew members on these boats are still stranded. And so that's one of the major things that's been pushing them down over time. When you look at how far these stocks have been hit, the overall airline industry is down around 57% when you kind of take into account all the different stocks. I wasn't able to find one thing that kind of grouped all of the cruise ships together, but they've been hit even harder. Royal Caribbean is down 63%, which is ticker symbol RCL. Carnival Cruises is down 68%, which is ticker symbol CCL. And then Norwegian, which is ticker symbol NCLH, is down a whopping 72%. So when you look at the differences between the two, airline stocks have recovered a little bit better than the cruise ships have so far. So in the past couple of videos, I've been talking a lot about cheap stocks to buy. And when you think about cheap stocks, my mind immediately goes to these cruise stocks and these airlines. But now that I've kind of talked about these similarities that have pushed the stocks down so far, let's talk about the main difference and the whole reason why I can't really ever see myself taking a position in a cruise stock. So overall, the main difference between these two sectors is the overall support from the federal government. When I talked about airline stocks at the very beginning, before the bailout came, I was very hesitant about ever taking a position because things looked very dire. However, when the news started coming out that a $25 billion bailout was going to be coming for these airline stocks, and that it seemed like they're likely not going to fail anytime soon, that ended up giving me a level of reassurance where I felt comfortable with taking a position because at that point, I wasn't really sure how much further things can go considering the federal government has actively come out and say that they're going to protect these stocks. And so while we saw a huge $25 billion bailout for these airlines, why didn't the cruise stocks end up getting any money from the federal government? And there's one huge reason behind that. to figure that out, we kind of have to understand how cruise companies operate. And the main thing is that none of these ships fly the American flag. While this is not a recent practice, from my research I found that this has been happening since the 1920s during Prohibition, where these cruise ships would fly the flags of specific countries, usually either Bermuda or Panama, so that they could legally serve alcohol. And so that has become very common at this point. When you look at the overall number of ships that are flying specific flags, you can see the huge disparity between places like Panama and then the US. From the numbers I could find, it's 8,600 ships are flying the Panamanian flag, and the US is only having around 3,400 ships. The main reason behind this, as always, it comes down to money. And some of the main benefits about flying these other flags is the fact places like Panama, you have no income tax that you have to pay to the federal government, and there are very lenient worker requirements. When you have a ship that's run through the United States, there are very specific requirements. There's stuff about it has to be owned by an American, it has to be produced in America, and 75% of the workers have to be Americans. And so you're going to end up paying all of these federal taxes to the United States that can be avoided if you just fly a different country's flag. And that's the main reason why these cruise ships have been flying other countries in the past. And so since they have not been paying taxes and they've kind of been getting around a lot of the rules and regulations about the United States, there's not been a lot of support for bailouts in the past. And so the main reason why I was confident enough to take a position in Delta, because I felt like the United States government was going to bail out these airlines at all costs, you cannot say the same thing about these cruise stocks. When you look at these two industries, the two main arguments for why they shouldn't be bailed out is one, the airlines actually pay taxes, and two, the airlines are very important to the overall US economy, and you can't really say the same thing about these cruise ships. So that was my quick analysis of why the airlines ended up getting bailed out and the cruise ships are having to struggle to find funding to stay afloat, get it because they're ships, for the next couple months until things start to settle down. All right, with that being said, I wanted to talk about what I think is the safest stock, my favorite stock, and then the one that has the highest risk but also has significant upside and a lot of reward associated with it. Before we get started, I have to remind people this is just my opinion and this is not financial advice. For what I think is the safest stock, I'm going to go with Southwest, ticker symbol LUV. This is a company that's trading for around $33 right now and is down around 39% year to date. When you look at all the airline stocks, Southwest has fallen the least, and that's mainly the reason why I think it's the safest stock to buy. The main reason it has not fallen so far, in my opinion, is the fact that it really emphasizes cheap and domestic flights. And that is a huge reason why they have not been burning through cash as bad as some of these massive airlines like Delta and American Airlines. And so when things do start to open up, and I've seen a lot of articles about people are starting to travel a little bit more now, I feel like Southwest, which really emphasizes these cheap flights, is going to be one of the airlines that's going to do the best during this time. And so when I look at their overall fundamentals, the first thing that I was drawn to was their level of long-term debt. Right now they have around $3.4 billion in long-term debt, which is really low in the overall industry, and that's counteracted by a really nice shareholder equity that makes a debt-to-equity ratio be below 0.4, which is very low. I talked in the past about some of these ratios, and when you compare it to even Delta, which I think is one of my favorite stocks, is above 1 right now, and Southwest is down below 0.4, which is very impressive and is why I think it's probably the safest airline or travel stock to buy in the future. A lot of this low debt comes from the fact that they're flying all the same planes, and so they're flying the same planes, they don't have as much variety going on, and they fly domestic routes. And I think that when things start opening up a little bit more, I think the general public is going to be jumping on these cheap flights, considering that they have not been able to travel at all for the past couple of months. We're going to be going into the summer pretty soon. It's crazy to think it's almost June, but I'm expecting that once the restrictions kind of ease up, people are going to be jumping back on flights and trying to get in the travels that they've missed in the past and make sure that they can get their travel in for this summer. So that's why I think that Southwest, ticker symbol LUV, is probably the safest travel stock to buy based off of their cheap pricing and their emphasis on domestic travel. All right, now for my favorite stock, it is Delta, ticker symbol DAL, big shocker. And so I'm not going to go into a long-winded discussion about why I love Delta. If you want to hear a really long discussion on why I really enjoy Delta stock, I'll link that up above right now. But some of the main things that kind of stick out to me about Delta is the fact that they have the best operating margins, meaning that they're the most efficient about taking revenue and converting it into overall income. So when things do start to open up again, they're going to be the most efficient at kind of getting back on track. They have very nice long-term debt-to-equity ratios. It's nowhere near the 0.38 that we saw with Southwest. But when you compare it to other places like United, ticker symbol UAL, and American, ticker symbol AAL, it looks really good overall. Also, I was able to buy the stock at a significant discount, and obviously things have rebounded a little bit in the past week since I ended up buying in, but I think there's still a significant discount for this stock. And so when you compare it to Southwest, Southwest definitely, I think, is safer, but I think Delta has the highest area that it can go up. And so it's down more than Southwest. And I think that when things actually start recovering and all of the borders start opening up, I think Delta is going to be the best bet in the future. Okay, now for a company that has significant risk, but also significant upside, I'm going to go with Royal Caribbean, ticker symbol RCL. Looking at the main three cruise stocks with Royal Caribbean, Carnival Cruise, and then Norwegian, I think Royal Caribbean is the best bet by far. The stock is currently trading at around $50 and it's down 63% year to date. So when you compare this to the overall airline industry, you're getting it at a better discount, which is why I think it has significant upside. And from most of the research that I did for this topic, it seems like Royal Caribbean is kind of thought of as being the top brand when it comes to cruise ships. I know there's stuff about Carnival Cruise being more popular, but when I see the overall operating margin, which is similar to the main reason why I like Delta, their operating margin is sitting around 17%, when Carnival Cruise and Norwegian is sitting in the around 10 and 13. And so that is very nice to see, because when things start opening up again, having a higher margin is going to be very beneficial to these companies. Going to the chart, Royal Caribbean has doubled since it hit its bottom in March, and that is very impressive to see. You cannot say the same thing when you look at most of these airline stocks. When you look at Delta, it was down around $18 last week, and now it's sitting at $25. And while that is a significant jump in price, this is not the doubling that we've seen with Royal Caribbean since it hit its bottom. And while I think it has significant upside, there is a lot of risk associated with this. As I mentioned, it does not have the backing of the federal government. And when you look at the all-time chart, I want to kind of point out what happened in the last recession. And so there was a huge drop in the stock price during that time. And one of the main reasons why I really like Delta is that they increased their revenue during the last recession. And it makes a lot of sense that these cruise stocks are very vulnerable during times of economic turmoil, because it's unlikely that people are going to want to be buying these expensive cruises when things are not going as well. And so travel will still be happening, but probably to a lesser extent. And so that's why I'm kind of worried going forward. I'm very interested to see what type of recession or what type of economic data we see for the next quarter. So overall, I think that Royal Caribbean has significant upside, but it also has significant risk. We have a potential recession coming, but it's also shown that it has bounced off of its lows already, doubling since it hit its bottom in March. And so there's a lot of upside to Royal Caribbean, but I don't think I'm personally confident enough in the industry, mainly because I've never been on a cruise and I don't have this sort of affinity to these cruise ships like some people do. So I'm going to be sticking to my risky pick with Delta, and I'll kind of just be watching Royal Caribbean and Southwest from the sidelines. So overall, that was my analysis of cruise stocks and the airline industry, and I'm very curious to see what you guys have to say about the similarities, differences, and then the three stocks that I talked about in this video. These industries still have a long way to go. Even though Delta has bounced very significantly over the past couple weeks, it is still down more than 50% year to date. So at this point, I don't think it's too late to get involved in it. I'm probably going to be adding to my position relatively soon. I'm hoping for a pullback during this week, and then I'm going to add on to the position that I already have. At this point, things are looking pretty optimistic in the overall market. We saw the S&P finish above 3,000 today, and that's levels that we haven't seen since early March. And while I think it's kind of extreme how quickly the stock market has rebounded, it has made a lot of people a lot of money. And so I'm very curious what you guys have to say about these risky stocks that are still pretty cheap at this point. I have a safe stock, I have my favorite stock, and then the one that has the most upside, but also has a lot of risk associated with it. So let me know what you guys have to say about those stocks in the comment section down below. Thanks for watching, and I'll see you on Friday.